Bharat Electronics and Hindustan Aeronautics on order wins. Vedanta is the other stock on our radar on the back of positive news flow. On the way down, we'll be watching out for HDFC AMC, UTI AMC, all the asset management companies, Aditya Birla Sun Life AMC, as well as Nippon Life AMC on the back of the news that just flashed at the bottom of your screen.
All right, Mark Matthews is now joining us. He's with Bank Julius Baer. Mark, great to have you with us here on the program. Thank you very much. First time we're speaking with you after, the Fed decision and the dovish hike is, I think it's now been called. What's your view? Global markets, Mark, which still seem to be in a bit of a turmoil. Go on.
Well, I think that the worry has shifted from inflation to growth, and that is because of the banking crisis. And we can see it reflected in Bank of America's Fund Manager Survey, where for 2 years, inflation was the #1 concern, except very briefly during the pandemic for 2 months. But as of this month, a credit event is the biggest concern. And so that, I think, does change the way the market is behaving. And we can see that in the fact that the big tech stocks are at new highs for the year, but the broader market feels choppy at best because it's weighed down by banks. And I think that it's still okay. I think chop is probably the best way to describe the market for the foreseeable future. I can't really see it collapsing because I don't think the government will allow a system-wide, problem in the banking sector in the United States a year before the election. And at the same time, I do believe that we are at the end of the rate hike cycle in the United States, although they didn't come out and explicitly say that yesterday. But if you look at the Cleveland Fed's inflation nowcast, which is a good track record, it's looking for 5.2% for the March CPI. And below 6, I think, would be a very psychologically important thing. So those are some of the things going through my head right now.
Got that, Mark. So what's the stance from here on? Do you think the market will be able to put behind some of these banking issues, given that, we've again got Ms. Yellen saying that they're willing to repeat those actions that they took with SVB? So basically, does the market go back focusing on economy, inflation, corporate growth? Or do you think this is still going to lurk in the background?
I think it will probably lurk in the background because the small and medium-sized banks were exempted from a lot of regulation in the United States to try to foster growth in the economy. And they are a backbone of the economy in many ways. One way is commercial real estate. And, I always find fascinating the second and third derivatives of major events and how we can look back in history and see why they happened. But at the time when the big event is happening, you can't really forecast these things. And so I think with COVID, one of the interesting legacies is the work from home phenomenon in the United States. And it's for real. I mean, office occupancy is only 50%, even, 3 years after COVID, because people tend to live in big bungalows over there, and they have their own nice home offices, and they have to commute a long way to get to work. So they're not going back to work, and increasingly companies are hot desking and downsizing. Now, I'm telling you all of that because the commercial real estate sector, 80% of it is financed by small and medium-sized businesses, and there's about $1 trillion in that debt that needs to be refinanced between now and the end of the year. So just that one little nugget of information alone, I think, is enough to keep the market on tenterhooks with regard to these smaller banks.
Right, Mark, you make us feel terrible on a Friday morning by saying people in the US have big bungalows and big houses, etc. Yeah. We live in our matchbox-size houses here. Just one question on the emerging market space. The US market's not doing well, developed markets not doing too well. Back in the day, one would say that, okay, developed markets not doing well means it's even worse for the emerging markets. Do you think that narrative changes and the emerging markets, especially India, decouples from that based on its own fundamental strengths?
So it depends on really if the S&P just flatlines, I think that's the best for Asia. And one of the corollaries of a peaking interest rate cycle in the United States at the same time as central banks in other parts of the world are still hiking. And last night you had the Swiss National Bank, the Norges Bank, Bank of England all hiked, and they said they're going to keep hiking some more. One of the corollaries of that is that I believe the dollar should gently weaken, and that, of course, is good for us. So, you know, it's always dangerous to look back on history and find parallels because there's so many variables at any one point of time in the market. But I would say that the early 2000s, after the dot-com bubble collapse, which in some ways is an appropriate comparison, were a very listless, choppy period for the S&P. And that was the beginning of a great transfer of money out to Asia looking for greater returns. And so I feel that to a degree, that's an appropriate analogy.
Right. Mark, thanks very much. Great speaking with you. Appreciate you joining in with that. Let's get to the big story for the day, which is, of course, the taxation changes with regards to debt mutual funds. And Radhika Gupta is now joining us. She's Managing Director and CEO at Edelweiss Asset Management Company.